So recently I've been to a Ford dealership and they just had rows and rows and rows of F-150s just sitting there collecting dust. And these F-150s, they're priced at $70, $80. I saw many of these F-150s for $100,000 just sitting there. And for a very long time, these F-150s have been Ford's biggest profit center. But now I think they're Ford's biggest problem. So Ford just released their earnings and they were actually very good. Revenue was up 20%, which is fantastic, but Wall Street didn't really like it. And why is that? So typically when a company reports their earnings and they beat like Ford just did, they will usually raise their guidance for upcoming quarters. Their guidance is just another word to say their goals for their future outlook. And Ford didn't do it. So because Ford did not increase its guidance going forward, that sent up a bunch of red flags to investors, to Wall Street, saying that Ford does not believe that these successes are going to continue in the upcoming quarters. So I'll just show you what this means. So Ford had a goal set for this quarter to be right here, but they actually came in with a beat. So they hit up here. So now what Wall Street expects to happen, I'll move my hand, this is level. So for their next quarter, they expect for them to raise their guidance from down here to at least up here to where they beat. But Ford didn't do that. They kept their guidance, their future plans, their goals down here. So what Ford is saying that as they go forward, they expect their actual earnings to go down to meet their goal, which is down here. And Wall Street absolutely hates this because that's just telegraphing that Ford knows that there's an issue going forward. They know that they're going to be slower going forward. They're not going to be able to beat an estimate if they raise it. So they've already got this head start right here from this first quarter. And they're even saying that now they're still going to go down from here. That's bad news. That means that they know their sales are going down, they know that their revenues are going down, and there's going to be a lot of headwinds in their way to stop them from progressing from this point on. So in their earnings, they mention quite a few headwinds that they know that they're going to have to deal with going forward. One is global economic uncertainty. We know that's here. Rates are high and demand is down, and that's something that Ford knows it's going to have to deal with. And the affordability of vehicles is not getting any better. The cost of living is not getting any better. Everything costs too much right now, and it's crushing demand. And that's really what the Fed wants to do. They want to crush demand so prices come down, so we get inflation to come down. That's why their motto is right now, we're going to stay higher for longer, and that is not good for a company like Ford. And Ford cites this as a headwind, and they know that this is going to be a major demand crusher for their vehicles going forward. So another headwind they said was that they knew that incentives were going to be higher going forward. What they also cited is that the price of their vehicles, they estimate, are going to go down by 5% over this year. I think that's way too low, but they are saying that, hey, we know our prices have to come down because they know in the future their sales are going to get lower, and to be able to sell their vehicles, they're going to have to lower their prices. And this is not good for margins. This is not good for them making more money in the future. So they know that this is going to be a big headwind for them that they're going to have to deal with at some point, because these consumers, at some point, they're going to dry up and they can't pay these $80, $90, $100,000 for these trucks. So their prices have to come down, and they know that. So they know that they're going to have to decrease prices at least by 5%, I think way more. But they also know that they're going to have spend in incentives to be able to get customers into vehicles. And another headwind that they mentioned is growth investments. This is just their EV sector of their company. And they lost in this quarter a whopping $722 million trying to get these EVs out into production, try to get them just in customers' hands, and it's really not working. What they've said is they really don't want to get into this price war with Tesla. They still want to make money on their EVs, but they're just not doing it yet. And what's really crushing them in this department, we all know it, it's Tesla. Tesla's been cutting their prices. and Ford is still trying to keep its Mach-E's, its Ford Lightnings at a price where they can still eventually try to make some money. But Tesla is really hurting this for Ford, and Ford's going to have to drop their prices to be able to compete with Tesla, but it's not something that they've stated they've really wanted to do. They have made some cuts, especially in the Mach-E's. They just recently cut some models up to 8%, but that's not going to be enough. The comparable model in a Tesla is going to be around the same price as a Mach-E. And really, right now, if you're going to look for an EV, you're not going to Ford, you're going to Tesla. So Ford is going to have to, if they want to gain market share of this big EV pie, they're going to have to get prices down at least to Tesla's level and most likely lower to be able to get customers from Tesla or customers that are thinking about EVs. Just the main brand is Tesla. The leading brand is Tesla. And I really think that they're going to have to get some price cuts to make these Mach-E's way more affordable to be able to sway consumers into a Mach-E versus a Tesla. But now here's the problem with that. The franchise dealers. These dealers have been just the bane of Ford's existence in the last year and a half, these 2 years. I've been to many Ford dealerships. I've seen a lot of Mach-E's, a lot of Ford Lightnings. I have yet to see a Mach-E or a Ford Lightning without a market adjustment. So it doesn't matter. Ford can cut down the MSRP on these Mach-E's down to zero. And the Ford dealer, they're going to add a $60,000 market adjustment. They can cut these things down $10,000, $15,000, it doesn't matter. These Ford dealers are going to charge whatever they want to, and they're going to add these market adjustments, and that's going to further just crush the demand for these Mach-E's. Ford is trying to gain a footprint, and the Ford dealerships, the franchise dealers, they're just working against them right now, especially in this EV space. And really, that's just crushing them right now on the Ford Mach-E's because no one else really has an electric truck that's just readily available right now. So whenever Tesla, whenever GM, when they do come out with their electric trucks, it's going to really put some downward pressure on the Ford Lightnings as well. They're already having so many issues. There's so many quality issues with the Ford Lightning, so many negative reviews on the Ford Lightnings. But they have first to market pretty much of the big names in the EV space for the truck. So just whenever these other manufacturers come out with their comparable models to these F-150 Lightnings, I really think that the Ford's going to get crushed in this environment if they continue to have the prices on these Ford Lightnings that they've been charging. Recently, I've been to this Ford dealership, and the MSRP on both of these Lightnings that I saw was $90. It was $100,000, and both of them had market adjustments on top of that. One had $5,000, one had $10,000. So these Ford dealers are not going to be working with Ford to help get customers into these Ford Lightnings, and it's just going to be a massive headwind for Ford going forward. All right, so now I said it in the very beginning of the video. I think the number one problem for Ford is the thing that's made them the most money over the last few years, and that's their F-150s. And the reason that it's the biggest problem is because the days of inventory, the amount of inventory that these dealers are getting on their lot is going through the roof. Just 2 months ago, they had 50-something days of inventory, which is the sweet spot. They want to have 50 to 60 days of inventory of these F-150s. Just last month, they were in the 80s. That is a 30-day jump in just a month. So next month, when we're going to see this data come out, it's going to be over 100. And they're not stopping any production right now on these F-150s. They're still pumping these things out to dealers, and dealers are just taking them. These Ford, the manufacturer is begging these dealers to take these allocations because there's nowhere to put these F-150s. And just like you can see that I went to this dealership just the other day, these Ford F-150s are everywhere. And you know what? They're not going to be able to sell them. They can't sell these trucks for $80,000, $90,000, $100,000 in this environment right now with interest rates as high as they are. These trucks, when you go to buy one, if you want to buy one and finance it, you're going to be paying $1,200 to $1,500 a month. And as costs are getting higher, as inflation is where it is, rents, mortgage, everything that you're having to pay for right now, people cannot afford to have a $1,200, a $1,500 monthly payment for a brand new truck. And you know what? Those people that can, they bought them last year. They bought them 2 years ago. And now they're upside down on these trucks. A lot of these people, they bought these trucks that were $70,000 MSRPs, and then they had these crazy dealer adjustments. I saw dealer adjustments all the way up to $35,000. So this $70,000 truck that they paid $100,000 for, now it's only worth 50 grand. So they are going to still owe probably $70,000, $75,000 on this truck that's only worth $50,000. So when they would traditionally every 2-3 years go to upgrade their truck, they're now not going to be able to do that, because even these people who buy these trucks that make a lot of money, most of them are broke because they spend the money just as soon as they get it. So they can't come up with this $25,000 difference because they're underwater on these trucks. So Ford's either going to have to do something very creative to get these customers in these trucks and make them even more underwater in the purchase that they are making, or they're just going to have to turn away these customers because these customers just can't afford to just keep upgrading every 2 to 3 years. And that's going to be a major headwind going forward for not just Ford, but for GM, for Stellantis, that these customers are just paid way too much for these vehicles, and now they're not worth even close to what they paid for them 2-3 years ago. And they're not going to be able to, traditionally, what they would do is just trade it in and roll the equity into the next thing. They're so far underwater that these new vehicle trade-ins are just not going to be something that they're going to be able to do. And that's going to take a lot of Ford's customer base that buys these brand new F-150s out of the market. So they're going to be losing deals there. So another thing that's really helped bolster Ford's numbers for the last couple quarters is fleet sales. Fleet sales have been up, and the reason for that is 2 years ago, 1 year ago, these companies that were trying to buy trucks for fleets, buy vans for fleets, they weren't available. And now as stock is starting to pile up again, they're able to buy these fleet vehicles. But all these companies that were waiting, they're all buying their fleets now. So they're not going to need these fleet sales next year. They're not going to need them in 6 months from now. So a lot of these fleet sales that are happening right now, it's not going to be a continuous growth model, because they're just going to already have their vehicles and they're not going to need to upgrade again for another few years. So all these things just to say about Ford earnings, yes, they were good, but even Ford themselves think that they have a rough future. They even think that their sales are going to decline. They're saying that by not raising their guidance, by not raising their goal going forward. Even though they got this massive head start at the beginning of the year, they know that times are going to get worse for them. And two, I bet a lot of these sales are really just Ford stacking their dealers full. I've been to these dealers. I've seen them. There's F-150s sitting everywhere. That's their biggest problem. They're going to be able to report these sales now, but they can't continue to do it. They can't continue to just pump these dealers full of F-150s. They're not going to be able to hold them. And I really think that's going to just be the biggest issue for Ford going forward, is the days of inventory on solely just the F-150s. The F-150s are a big problem. They were producing so many of them in the last 6 months and last year because they were cranking them out. So they wanted to keep the F-150 supply high to be able to make more money, because they're making more money on these F-150s. Their margins are great on the F-150s because they're charging so much for them. But Americans now, $70,000, $80,000, $100,000 trucks, in this environment, they're not going to be able to do it anymore. At these rates, they're not going to be able to do it anymore. And this inventory supply, these days of inventory, is a major, major problem. And Ford's going to have to figure out creative ways to be able to get these cars to customers, whether it's special interest rates, whether it's incentives, whether it's lowering prices. I think they're going to have to do all three if they're going to move these trucks and not have an inventory crisis on their hands. Growth model for Ford going forward. That's funny. That's stupid. I shouldn't even put that in there. Source of income for Ford. I don't like for Ford. And for Ford again. for Ford.